Hey guys, and welcome back to Let's Talk Forex, Alison and Chris. Today we've got a very special episode lined up for you. We're going to be talking to Patrick Reid, who's a veteran trader with over 15 years trading experience. As always, if you have any questions, fire them over to us at podcast@fxscouts.com, or you can get in touch with us on social media. Hey, Alison.
Hey, Chris. How's it going?
Yeah, I'm good. I'm in sunny Spain, which is lovely. It's about 24, 25 degrees. I'm looking at the sun shining over the golf course out my window. Can't complain.
Oh, nice.
Yeah, no, it's lovely. How are you doing?
Good. Yeah, fine. It's not so good here. It's very rainy, but I can't complain as well. We really do need the rain. So as you mentioned, we've got a very exciting podcast lined up. We are interviewing Patrick Reid. He's a trader with almost 2 decades of experience, as you said earlier, and he's traded derivatives at one of the biggest prop trading desks in the world, and he's traded cryptos, equities, and now he's got a firm focus on Forex trading. He was actually headhunted by a New York hedge fund, Edgewater Markets, and that's where he traded spot FX. And he's now the co-founder of Adamis Principle, and he basically heads up the mentoring and education side of things. Welcome, Patrick.
Hi, how are you doing?
Yeah, it's good to have you. Very good to have you here.
It's fantastic to have you on, Patrick. We've heard a lot about you from Caroline Rundell, Trading Angel, who we had on the podcast a couple of times.
Great. Oh, good. Nice to meet you both. Happy to be here.
Yeah. So, Patrick, it seems like you started your career in a different industry before moving to trading. Can you tell us a little bit about your background and basically how you became a Forex trader?
Yeah, absolutely. Thanks for inviting me on. And I guess, like, for me, I'd always been a kind of a bit of an outsider with my choices and careers and all this stuff. And I've taken risks, right? So, you know, in my early career, I thought, you know, I went to kind of film school. I was creative. I worked at the BBC, and that was the lion's share of my 20s and 30s. I was at the BBC for 15 years, and you know, I loved it. I was into music. I was a touring DJ, quite fairly successful for about 2 years. Toured all around the world with a live band.
Amazing.
I still love music. I still have my old records and Technics 1210s in the storage. Still got my studio. Have to dust down and maybe one day, who knows? But I'm a bit busy.
What kind of music are you guys playing?
Dance music, yeah.
Dance music. Oh, incredible.
Yeah. So
very cool.
Yeah. So thanks. So we loved it. I actually loved it. I mean, that was more like late 90s, early 2000. And then, you know, I realized you're not going to have a hit record. You're going to, you know, you need to have a day job. So that was what I had to stick with. But you know, it was a heady mix, especially late 90s, early 2000s. It was a really good time for club music. But I always felt like a bit of an imposter because I surrounded myself with really smart cookies and kind of learned a lot. I was a bit of a sponge, and I threw caution to the wind, and I just went for it, you know. So I loved it. You know, it was you're on this planet once, apparently, so I'm like, look, I want to make the best of it. So to date, I've had an incredible life, and I've had big challenges, I've had massive ups, massive downs, but I'm here. And I'm here today to talk about my journey. So that was great. And then I kind of, you know, started going back to the kind of day job, and that was fine as well. Started working with different departments, but underlying was a sense of I'm not quite feeling fulfilled. I'm not quite happy with my lot. I'm not quite into looking at the next 10 years, where will I be kind of thing. So I was just looking at different things. And then it all kind of came to a head where there was a particular period where, you know, I looked in the mirror And I thought, I'm getting old, which is funny today. But at the time, I was 38. And I was like, I'm getting really old. It's like, what's going on? So I had this epiphany. Two things happened in that week. I'd met a guy who was about to retire, done 40 years. He got a gold pen, which is amazing, lovely, but an autograph book. And it was filled with signatures. And I thought, oh, they're going to be celebrities, or they're going to be like some of these really cool musicians. They were filled with, most of them were HR senior managers. And I was like,
oh, gosh. No.
Yeah. So I was like, look, I don't want that. And then, he sort of, let's call him R. His name is Rod. I said, Rod, how are you? So I've blown it now. I've given away his name. I said, Rod, I said, Rod, look, how do you feel? He said, don't do what I've done. Just go with your passion. Go with whatever you feel, because don't leave it too late. So I was like, okay, right, thanks. So then the next week, in the same week, I met through a friend, Janine. She introduced me to her husband. Now, her husband, just for dinner, was the owner of Tower Trading, with the biggest futures desk in Europe. So I was like, so we went for dinner, went to a really nice dinner, and I'd saved a bit of money when I was at the BBC, and I kind of thought, you know what? I asked him, I said, can I see your desk? Can I see your floor? And he told me the whole history of futures, from the Chicago pits in the 70s, from Life, the London Exchange futures in the 80s and 90s and stuff, and that was his background, So he had the multicolored jacket, he had the hand signals, all that stuff, and I was like,
right,
this is it. This is brilliant, right? So I went to the floor, and it was like screens, squawks, multiple channels. There was noise. There was a big buzz about it, and I loved it. I was like, I'm meant to be here, right?
So it was a real light bulb moment. Was it like a eureka moment? Like you were there and you realized immediately that this was your place?
100%. So I got to, I was kind of rooted at the floor, on the floor. It was at the old NatWest Tower in the Tower of London, just near the Bank of England. And there was a place called Tower 42. So I was there and I was like, this is amazing. I want this, sign me up. So I jacked in my safe job. I had a bit of money to trade with. And, I was their oldest apprentice, basically.
And how did you learn to trade? Like, what was the process from there?
I got thrown in at the deep end.
Wow. Terrifying.
Wow.
Yeah, terrifying. It was. Yeah. I got thrown in. I was trading Bunds, German debt. And I was like, there you go. Turn up at 6:30 on the desk for the open at 7. I was like, all right. What do I do?
That is insane. I mean, I'm not sure. Could that happen? Does that still happen? I'm not sure that can still happen today.
Very different today. Very different today. So parts of it are the same, in the sense that when you're trading in that environment, an institutional environment, there's nothing quite like desk experience. So, and I say this to my mentees, I say, look, it's about desk macro, not macro, not economic macro, not academic macro. It's about tradable macro, and that's about desk. So, looking at the real life correlations of something kicking off here and then going off there and then joining the dots, you only get that really on the desk live as a trader. Finding a mentor, someone who can manage money in a crisis, that's desk. You really learn that from the desk. And you've got the pit experience as well. So you've got various levels, and you've got each trader with nicknames who are really good at certain things at their edge. And so you learn, you become a bit of a poacher, if you will. So I was like, look, here I am. I've jacked in the safe job. I've left the Guardian newspaper at home. Actually, I did walk in with it, and they were like, you need to get the FT, not the Guardian newspaper.
What are you doing carrying that? Exactly.
What the hell are you doing? Yeah, you left the BBC type. But I was like, I'm not. I'm just like, anyway. but that was funny in itself. But the other thing that really struck me is when I turned up on my first day, got a bit of a tummy, which is all good food. But so I went to buy a really expensive black Dior suit, which was a little bit tight.
Mm-hmm.
So I kind of breathed in. And when I breathed in, I was like, yeah, I look all right. It was a really amazing suit. So I breathed in, chest out, walked in, and I was actually thinking of getting red braces. I'm so glad I didn't. So I walked in, everyone's wearing jeans and t-shirt. And I was like, oh my God, what have I done? Everyone's like, who's this dude? He's a newcomer. What are you doing? So I was like, I had my desk, I had my 8 screens. And then obviously the day after, it was like, yeah, jeans and t-shirt. So I was there. I had a kind of mentor at the time, and I was on the demo account. And yeah, I had my screens, and I just got stuck in. I looked at the data. I got given a book list. I was listening. I was learning. I was picking people's brains. I was thrown in at the deep end. And really, in the first hour, I was trading.
That's incredible.
Amazing.
Yeah. So I was like, oh yeah, I can kind of get my head around this. And then basically the hour later, the head of the desk was like, why is that moving up? What's going with that? When's the next data coming out? Where's the risk about? Why aren't you long? Where are you short? What does that mean? I was like, so that was kind of part of the tough love,
mm-hmm.
so to speak. And obviously what I just said doesn't have any swear words. So I filtered out all of the naughty words, basically. But then I was like, yeah, this is it, right? So it was very much like that from day one. And I then, obviously had a routine. I made it. I survived that first week. And by the end of it, I felt like I'd learned probably about a year in 1 week. So I was like, I felt this kind of rush of new knowledge, and I've made it, kind of thing.
Just a bit more detail on that. Like, what was your approach? Like, what did you find worked in those, if you remember, in those first couple of weeks?
Yeah, I didn't know what I was doing, basically. So I hadn't a clue. I just wanted to look at charts, read the announcements coming out, and try my best to picture it all together. I mean, I remember that first day I asked the head of the desk what GDP was, and he was like,
oh my word.
Wow.
He just kind of looked at me like that, and then just walked off. And that was it. That he really was like that. So look, I asked every single question under the sun. And the key thing is, what I learned very quickly is I was engulfed in a lot of tough love. Now that was thrown into various pressure valve cooker situations. And a lot of that is testing. But I knew I had made a decision, and it was almost like I kind of enjoyed the pain in a weird way. It was like almost masochistic, because I was like, I know I'm here because I decided I've done this. In that first week, a couple of times I went to the loo, had a little cry, came back, dusted myself down, deep breath, back on again, and just learn.
But also sounds like you were given a little bit of leeway as well. I mean, as well as the tough love. I mean, they must have realized that you were completely unprepared for this, but that they saw something in you.
Yeah.
They must have seen something in you, and they were like, okay, let's keep pushing this guy and see what he can take and see how he's going to respond.
Yeah, totally. And coming back to what you're saying, Alison, it's like I sort of didn't. It was a whirlwind, a flurry, and I remember that it was only the week after. I mean, it was basically gasping for air that first week, surviving. I didn't understand anything. I'm not going to lie, but I asked loads of questions, and my hand was so aching because of writing, and my jaw was clenched because I was asking loads of questions. And by the end of it, we all went to the pub, and it was all kind of like, "Yay, survived the first week! Yay!"
Amazing.
Everyone's like, "Hey!" It was all kind of like, "Oh, you guys," So it was very much, the camaraderie was there. And, I felt I entered this club, basically, the Futures Club. And
That insinuates, so there's a lot of people who didn't survive the first week.
Yeah.
Mm-hmm.
Yeah. So sort of the next week I started to get a structure, and for me, I knew what I kind of got a sense. Look, I knew how to read charts in the sense that went up, that carried on doing that pattern, so therefore that might happen in the future, kind of stuff, basic. And I knew that often the markets move. That was my second week. I thought, why is that gone like that when it for no reason? So then I tried to look out, and I became a bit of a kind of, because I love reading. We're talking about offline about reading. I was like, I'm going to research why that's moved and why it shouldn't have moved, or why that should have moved and why it didn't move. That was my second week, and I was like, okay. And I realised that, you know, the banks and the asset managers and the hedge funds that the traders were trading against or with, they didn't know everything. It wasn't a case that they had the oracle. They were the oracle. They had the golden key to open the door. I realised that in my second week. So I was like, okay. And then I also realised that I'd met and befriended each trader with different edges. And some of the guys, they're all really different. Some of them were really rubbish at macro, but really good on risk management, which I think is really important. And risk management, I remember thinking, oh, it's so boring, it's so dull, it's so defensive. It's not. It's the most creative thing in the world. It's exciting because it's about scaling up as well. So I learned that in my second week. I learned the basics. I read a lot of economics books in my second week, and then I just grew that way. And I had a structure each day. I would come in, I'd wake at 5:45. I'd come in, I'd get in the desk at 6:30, and then I would prepare the day's live events, previous closes from the bond market in futures the previous day. And then I would prepare for the Bund Open at 7, I think it was at the time. And then I'd look at all the data coming out for that week, that day. And then I'd just kind of look at the key levels, the highs, the lows, the different indicators. And then I'd listen to the commentary on the score. And I'd have that. And I'd just sort of, that would be my broad structure. And then I'd obviously start to plan my trades as well. And that was by week 3, 4. And really the learning just went really exponential after that. So I just listened. I listened to mentors, and I was just a sponge. And I asked a lot of very silly questions, and I grew. I grew, and that was it. I just grew and grew.
How long would you say until you were comfortable? Until you actually felt like is there a moment where you realized that, that you were comfortable doing this now? It's
different types of comfort. I remember the different sort of, I never feel comfortable. That's the truth. But because our markets change every day, and it's a healthy being uncomfortable in that sense. I'm a comfortable risk manager, and I've seen a lot, but I've got a healthy respect for markets. I've seen markets do things, unimaginable things. Oil going negative, right? That was massive on the futures desk. I think it was a May contract, WDI futures, and no one predicted. There were so many massive bids from big players at zero. No one imagined it would go minus 14, but it did, right? So I've got a healthy respect for that. But I think coming back to your question, I think when somebody said, I think the first bit of comfort was I was so scared, and I was like, I've got to present to the group, and I said, okay, let's here's my trade plan. And then I think the head of the desk said, yeah, good plan, right, next. And I was like, oh
it was a good plan.
he didn't tear a strip out of me. He was like, that's okay, right. And so that was it, really. But yeah, slowly sort of my first big day, my first successful week, my first profitable quarter, my first game-changing year. These are big kind of big pivots, big kind of stepping stones. Scaling up, that was another big thing. Doing what I did on a small size and scaling up successfully, knowing that it's just you doing the same thing, but you're just having to manage that risk more effectively.
That must have been scary as well. I mean, it really plays a part. It plays on your psychology, I think, more than anything else. So.
Well, the thing about scaling, again, what we teach is that it's about, fear, FOMO, FOLO, imposter syndrome. There's a direct correlation with risk management. So if you know what you're risking and you're comfortable with that, fear gets reduced, if not removed.
Mm.
And if you're playing on risk reward, the probability of 50-50 win-loss ratio, and you're actually saying that I accept this loss, which you should be, because if you don't, you shouldn't be trading it. And when you pull the trigger, you're okay with the size. If you're not okay, if you want to close out, you're doing too much size, so reduce it. So you get to that sweet spot. When you've done that, you move on, and then obviously there are ways to scale up without scaling up the risk. And as your account grows and you just get more confident and you discover your edge, then you can put a bit more size on that edge. So there's that as well. But really, scaling up is just skill you learn. Scaling up, you don't have to become a better trader at all. That's what I learned. You really don't.
No, I was saying you've basically just got to do the same thing and apply the same principles, but at with bigger lot sizes. Yeah,
absolutely. And it's a management of risk, and essentially, it's being tight aggressive. It's knowing your R&R, it's knowing your win loss. It's looking at your vol versus your stop. It's knowing the higher the probability. It's spotting trend changes and all this stuff, and it's acting on that. And really, it's accepting there are loads of ways to do it by minimizing your risk as well. And all you need is one or two trades to get you to the different default setting on your lot size or your account size, for you to go up a notch, really. And I always say when you're scaling up, it's like going into deeper, colder water. I remember when actually I was in South Africa, I'm really into diving. So I was in South Africa thinking it was so sunny. I was in Cape Town and I went into the water. It was about April or something. I can't remember. I went into the water, I dived in and I was like,
you can't do that in Cape Town.
I was like, what is going on? And I was like, it's just like scaling up. It's like trading. So you can't go into the deep cold water. You just got to edge yourself in. So that's what I did. And it's exactly the same. It's, you don't start, from, trading massive size. You just start from small and grow. The longer you're doing it, and if you're good, you do tend to, get better, as you grow. And that means you take on a bit more risk.
Seems like quite a different journey from, you just jumped straight into basically institutional trading. But a lot of retail traders have a very different journey. They hopefully they start small and then sort of scale their way up. But what do you see the biggest difference between sort of, you probably now mentor I would assume more retail traders that come to you. But have you seen a difference in the way sort of you mentor or the approach that retail traders take compared to what institutional traders do? They probably don't have such a rapid start to their trading careers, but what is the biggest difference between the two?
The work rate and understanding scale and risk management and finding, confluence, understanding deep macro. So most of our clients, I'd say half of them are institutional, half of them are retail. Yeah. So we work with senior staff at BlackRock, JP Morgan, Morgan Stanley, UBS, Nomura, Westpac. And these are senior strategy guys. These are head of risk, head of operations who want to, get to the front desk, front office, or they want to trade their own account on the side, or they just want to kind of get more hands-on. I also, we also mentor ex-spot or ex kind of asset managers traders who want to move into FX, or the export guys who want to have a different edge, or they've lost their way, they just need some fresh eyes, stuff like that. The retail side, we're the real deal. We say, look, we offer an institutional product for a retail price and a guaranteed futures desk at the end of it. So that's really where our unique selling point. And the people that I get approached a lot mainly on LinkedIn, when people come to me, we're pretty upfront about it. This is not what you're going to find anywhere else. Mm-hmm. You need to work hard, and you're going to learn things you haven't learned before, because this is the real deal, right? So the retail side that come to us know that. So they're very curious, and they want to change their career, or they want to be a professional trader, or they haven't got to their full potential doing, following somebody on YouTube, or being self-taught. Two guys I spoke to a couple of weeks ago came to me and said, I'll get this through hard work. I was like, that's not going to happen if you're self-taught. And I said, look, whether you choose us or someone else, you in your bedroom, right, only trading technicals, breaking even after 10 years, has to tell you something. And he's like, I'm banging my head against the brick wall. I don't, and unfortunately, those guys, it's difficult to help because they've got so many bad habits, and they just think through hard work. No, you need to find someone with more experience and the hard work. Hard work's just one bit of it. Mm-hmm. So that's the key thing. But the people who I'm very fortunate and privileged to mentor that have turned and gone in from retail to institutional space. And which is what I did, really. I mean, I didn't have any experience and did it. No. I learned the hard way, and that's really what we do. But the other thing is the work rate, coming back to what you're saying, Alison, and the size you get, and the access to the information. And really, if you fat finger a 00 on a retail account, say you've got 200k, whatever, you might be able to get a 10 lot away, or a 1 million account away or something. But if you put in 100 lots, you'll probably get a rejection, right? Mm-hmm. Yeah. When you're in an institution, you'll get that done, and you'll wear the risk, and you won't get the broker calling you up saying, "Is this okay? You've got half a fill, you don't have a margin, blah blah blah." The Bank of America will call you up and go, or they won't. That's even worse. And they'll go, "Yeah, you've just done like 100 million. What are you okay with this?" And you're like, "I've got filled." Whoops. Right? Which happens more often than we realise. It happens in big institutions. So the work rate and the size and the information you've got access to as well. There's no kind of, you've got to be good, otherwise you're out. That's the key thing. But it really does. It's a whole different level.
And so, I mean, just to rewind there a bit, I mean, you talking about the kind of traders that you mentor when they come in, and listening to you talk about your experience. I mean, do you get a lot of traders come to you? Well, maybe not a lot, but a few who are really raw, like very pure beginners. And if you do you find them more easier to teach in a way?
I do. Yeah, definitely. Yeah, absolutely. Because it's a blank sheet of paper. Right. And if they've got raw quality, that's great. But even if they don't, but the fact that they're there and they're humble enough to say, "Look, do with me, mold me, do anything you want. I'm here. I'm going to turn up. I'm going to do the work. I'm going to ask questions." Those are the people I love, because that's what really I was like, and if I can do it, they can do it. And it's tough. It's not easy, but it's the best job in the planet. It's so empowering. It's invigorating. And I live and breathe it today, so yeah, but having said that, in some ways it's a joy to teach more experienced people because I sort of learn as well. Like I taught a rates trade, an ex-Citibank rates trader. He just needed some fresh eyes, but we were having a really nice peer-to-peer chat about rates transmitting into spot. There's another a really great client of mine who's an ex-senior economist at Westpac, and we have really deep economic chats. And I learn a lot from her, and I'm like, yeah, that's all great, but the market's not bothered. So she's like, oh yeah. So it's really nice like that. So I really love those as well. But it's a privilege for me. I like gaining. I mean, to teach is to learn, and I love gaining insights and seeing that change in the light bulb flicker and explode and crack when they get it. There's that moment. I'll give you an example. Yeah. Two guys I'm teaching. They were stable, had a dip, and then really made it. And often that's what in P&L terms. And it was around. There were two guys. I call them Mr. Yen. So they really exploded their P&L around the carry unwind in August.
Oh yeah,
right. Yes.
And they make their bones, right? And now they've just gone on to bigger things. And I'm placing one of them in a futures desk in 3 weeks, and the other one in Q1. So I'm like, that's amazing.
You must be so proud.
But they put the work in.
Yeah.
It's amazing. It really is.
That really must be one of the best parts of your job, I guess, is the success stories.
Yeah. It really is. And a lot of the clients become our friends. We go, we have global clients, but we try and meet all of them as well. I remember a client we met for lunch because we like to get to know them and we grow. A lot of them are very loyal to us. So we sort of like, I had lunch with a guy who'd signed up for our 3-month program, and he was in London, and he was like, "You're really real, aren't you?" And he was like, it was almost like pinching me. And I was like, "Yeah, I'm not just on Zoom. I am real. I meet my clients. I really care about my clients, and let's have a lunch and talk about macro." And they're like, "That's amazing." I was like, "No, it's just normal." So I've been to loads of, I just got back from Dubai. We traveled all over Eastern Europe. A lot of my clients in the States. We've got a trip coming, Australia. That's going to be a big one. And we might be going to, of all places, a couple of countries in Africa. So,
oh, wow.
We'll see. Amazing. Yeah. So, it's great when it, I'm very lucky to be in where I'm at.
Well, you have to let us know when you do. We have a lot of listeners in Africa, so I'm sure they'd be very interested.
Fantastic, yeah.
So you started trading German bunds, but you said, off camera earlier that you're very much FX trader these days. When did that switch happen, and why? What was it about FX?
I think it just it's a bird that flies straighter. It's a cleaner transmission. I just really gravitate towards it. You get the moves, and I started in the end of my futures days, and then I really learned so much from the old spot guys in FX, and that's when I learned about interest rates, the correlation, the short end, and I learned about how FX is just because it's so deep, it's less prone to kinks. It's not manipulated. Not like, say, other asset classes are. So I just really fell in love with it. Every FX pair, it's got a different personality, a different DNA, and I love it. And there is no better asset in my world. And the funny thing is, like last week, quite a few asset managers have been in touch with me, as asset manager execution traders. And they're like, "So FX is it quite important?" And I'm like, "Yeah." So you run a $500 billion real money fund in Switzerland, and you don't think FX is important, and that's the truth. because
That's crazy.
It's an afterthought.
It's an afterthought.
Real money only use it as overlay or hedging or getting stuff done, right? So it's just 7 trillion a day. How about that? And they're like, oh yeah, but we're not really bothered. So
yeah, that's insane. That's crazy. That there's still that kind of.
It's crazy, isn't it?
Yeah, people think like that in institutions.
It just seems removed. Like it seems out of touch with the whole market in a way. Do you know what I mean?
Well, it's not, because you have to remember that's their world. So that's what they do. Like if you're an asset manager, your world is equities and valuations, and you only have the FX lot, the small desk in FX, to get your stuff done through a bit of overlay hedging and a bit of this and a bit of that. That's their world, really. They don't do spec. They don't do all that stuff. So I'll give you an example. I was at the Trade Tech event, which is the biggest FX buy side event in the world. I was a moderator there in Amsterdam. I've done it a few times. So I was there. I was on the panel with the head of trading for a Munich fund, which was 323 billion, right? The carry unwind in dollar yen, which was 20 big figures, 2,000 pips, not fast. Didn't really affect a P&L. It was only after that Asia stock crash into Sunday night into the Monday morning and then we got the bounce after the Fed goozled. We started jawboning, right? So didn't really affect them. They're hedged out. It's the only real money. So that's their world. For us, it's like, hello, ball, hello. Yeah. It's where we make our bones. Hello. But yeah, it's just like, yeah, okay. Yeah, it was kind of, they were talking to their risk department, but nothing really. And that's a lot of it is long-term, real money.
You said, so you fell in love with FX, and then did you trade FX in institutions before you started your current work?
Yeah. Well, in my own book in futures. Yeah. And then obviously I was doing stuff at Edgewater. So absolutely.
And so you moved into FX, and then when did you start the Adamis Principle?
Yeah, so about 8 years ago, my old boss at Edgewater, he just said, look, how about we start a new company? I said, yeah, we did it. And it was brilliant. We wanted to cut through the BS and provide an institutional experience in education. And also we have a recruitment arm as well, which Adam looks after. And, we felt a gap in the market. And then, we were kind of finding our feet. We're an FX consultancy. We're finding our feet in that space in the first 3-4 years. And then really in the last 3-4 years, I was really wanting to get my experience and deliver it. So we now help late career changers. That's what we do, to be professional institutional traders, if you want it. So really that's our kind of niche. And now I head that up. And Adam looks after, we have an executive search recruitment arm and Adam has got a lot of contacts in banks and sell side. He's been a trader for 35 years. So we felt, we have various projects we do for various family offices, or obviously I head up what we do on the mentoring side, but we also have special projects too, with various contracts with payment companies, or providing desk strategies for individuals, or report, or even just short in-person events for high net worths as well. Like I might be doing that in the next couple of weeks. We're flying out to people who want to set up their own shop within their home, stuff like that. We can get them together with liquidity providers and obviously futures desk and stuff like that. So yeah, that's what we do. Yeah, we just love it, and it's gonna grow from there. We got a big announcement. I can't tell you, which is really annoying, I know. It's really annoying, I know, and I can't believe I just said that. But I will let you know. But watch my LinkedIn feed for the announcement. But that will be coming in about probably about November time, and it's really exciting. So we're going to do that. But we're always up for new things. Dubai is a big place for us. We're hopefully going to set up an office there at some point. It's a place, been there a few times, and have clients there. So we've got some exciting events coming up. Yeah,
sounds really varied. So it must keep you interested.
Yeah, I mean, look, we're FX experts, so that involves everything with FX, and that means I love macro, I love rates, I love FX, and everything revolves around that. Really, the core is FX, and I've traded other assets in futures, but FX is really at the heart of everything we do.
And that brings us neatly on, actually, because I wanted to, before we let you go, I wanted to pick your brain about the current state of the markets. It's quite an interesting time, and you mentioned the unwind in the yen and that blip in the markets. That was interesting, but we're coming out of this interest rate cycle now. We're coming down the other side quite rapidly, and we've seen the US dollar has been much stronger than I think a lot of novice traders would have thought, especially since that big rate cut on the 18th. Why do you think is driving this?
Well, it's all about swaps. Okay, so the thing about the headline's 50 bips, fine. It was a hawkish cut, and essentially swaps markets have been running to the extremes from January. We were pricing 170 basis points of cut in January. We're talking about a recession. It's just utter nonsense, right? So, resilient macro has caused that. We had a lot of doves fly out the Fed in December, and that got that was at the dollar lows basically, and then we just grew from there. So I would just say the pricing of OIS has been repriced to a more of a in line with what the Fed's projections are, the dots, right? So that's it. There was nothing really more than that. If you look at, there's a great chart we like to look at, the City Surprise Index. You have two legs, one the US and another one Europe. And for those who don't know what that is, the City Surprise Index is a great little chart that is an index that covers data being above and beyond what's forecast. Okay. And they throw that into the index. And if the line goes much, much higher, that means it's above and beyond a beat than forecast. If the line goes much lower, it's above and beyond it, but the miss. So if you have the US and the Europe, you can see the legs going much wider, one in the north and the Europe in the south. That's really contributed to a lot of the dollar's rise as well. But for me, it's mainly the swaps reprice for dollar.
This is the new normal for, say, the EURUSD.
I think, look, it's data dependent, as it always is, and it has been since J. Powell got in. The thing for me is dollars ranging from against euro 106 to 112 for the year, right? It's not going to be breaking out of that. If you compare that to 2 years ago, very, very different, right? So these are what we have to realize. So I would just say that it's not whether the dollar is bullish or bearish. It's more of a value play. So volume profile is something I learned in futures. And really, you have to look at this, where value area high and low is and where the mean is. I don't see that changing. I think the European, the Ester curve is getting fairly close to where the Fed's dots are, which is fairly close to the swaps curve in the US. So there's not much juice in that. I just see more range really in dollar and playing the fair value. If you're looking at euro dollar, guess what? 112 is your high, which is basically what we had. If you put euro dollar on the daily, I'm just getting my chart up here. back in the middle of 2023, it was 112.76, which incidentally was when ECB knocked up dovish. That we tested 112 as a figure, a double top in summer this year, and then just recently, nothing's really changed. I think the low will be 106 again. So that's ranging. Yeah, no, I don't see any change.
A lot of economists and analysts you see them wringing their hands now about the state of the Eurozone, and worries about, recession and poor growth, obviously Russia, Ukraine, potential incoming Trump into the United States. It's geopolitical events, that are impacting the economy. And there's this, fear. There's that the finance meeting, the finance ministers meeting recently. And I remember the FT reporting saying there's a palpable sense of fear among the finance ministers in the EU that they're falling behind and that it's a chronic condition. So you say the bottom of this range is 106. I mean, you don't think there's any way that we could see this weakness in the Eurozone really translate into a continued weakness, something that goes worse than that?
No, I don't see it going. I mean, I don't see 105. You have to look at what's priced. So, and Eurodollar's it's the most heavily traded currency pair. So it's got a lot of, shall we say, real money accounts buying it cheaper.
Mm-hmm.
So it's never a straight move just on economics in Europe. Keeping it real, Germany's on the brink. China's in the gutter. The stimulus is stuttering. There's a lot of sizzle but no sausage on the China stimulus.
Yep.
Right?
Yeah.
Sorry to put it that way, but that is it.
No, I agree. Yeah.
It's a massive problem. Manufacturing relationships with Germany and China, as you know, they're really, really key. So, at the end of the day, then you've got the risk event with Trump. How many, is going to be a new tariff war, which there probably will. But that whole Trump thing will only kill Europe even more if there's a red sweep, right? That's going to be like the playbook of 2016, which I traded. It's going to be a similar thing. If you don't get a red sweep, it's not really going to happen.
Yeah.
So that whole thing about selling China, selling MEX, buying Mag 7, buying inflationary derivatives, all this kind of good old-fashioned Trump 2016 trade, unless you get a red sweep, you're not going to get that done. So there will be a lot of that at play. Europe, Europe's Europe. It suffers really from a single mandate. And they put aside growth and wages and jobs because that's not in their mandate, right? And they've made mistakes. Trichet made two mistakes, raising rates because of the mandate in a crisis. A similar thing happens. We survived the Greek crisis, and the thing about the euro is it's broken in many ways, and it's patched together a hodgepodge of countries patched in. Some got in through the back door, without many questions. If you be frank, they weren't put. The euro is still quite young. It wasn't put together for economic reasons. This is what people forget. It was for political reasons.
It's a political project, exactly.
So why would we expect it to be roaring as a unifying cohesion? Right? So it's like, hold on. So Germany's the engine. Germany's failing. It's on the edge, right? So there you go. They've got a single mandate. Sometimes that can blinker you, I don't see that unless China really turns the taps on.
Yeah, that's you touched on it briefly there. I did want to talk to you about the China stimulus. There's, as you say, a lot of sizzle but no sausage. There is a danger here that the sausage never appears. And then, and so much of the emerging markets, and I don't know, emerging markets, like the Rand in South Africa, where Alison's from, they're so reliant on China. What are the chances, you think, here that that Xi Jinping is not, his heart really isn't in this stimulus?
It's not.
That's what I'm feeling as well. Yeah.
Yeah. It's not, because it's the short-term sugar rush. So, I think China is more on the supply than the demand of economics. So they're more long term. They support government projects. They support the zombie companies. They're very much like that. That's in their DNA. But when it doesn't play, they've got to kind of, ultimately it's a good for the economy long term, but you've got to keep the patient alive until then. So it's like, well, they're going to need to do something. And, there was this huge optimism post-COVID. Obviously, they were one of the last, if not the last, to raise the restrictions. And there was this huge kind of euphoric expectation of them opening up the economy and everything's going to be great. And certainly Australia were really salivating at this prospect. Because let's not forget, Australia didn't suffer in 2008, right? They didn't go through that suffering. So they don't know what pain is, right? They really don't. They really don't. So they're like, yeah, great.
They're not traumatized.
They're not traumatized. They don't have the scars, right? They right? So they're like, everyone's happy, and then actually, come on, guys, what are you going to do? Oh, you're going to cut one of your loan rates by a bit, so they're in a bit of a kind of tricky situation, the PBOC. So on the one hand, they want to do the big vision long term. On the other hand, they need to keep their 5% growth target. And that's in trouble. That's not, we're looking at that not hitting. And put that into context with double-digit growth, which is normal. I'd love to. I'd take 5% any day. So it's context, isn't it? So look, they're in it's a tricky one. They might do. I think looking at their action, you've got some uplift in Chinese stocks on some of that. But look, where is it now? I mean, there's some muted reactions, and so it's fading into this. The more you do this with markets, the less belief is in there. So even if they did turn the spigots on and flooded with some proper QE, I'm not sure you'll get the initial reaction. I don't know. I really don't know. But it's a hard book. It's a hard thing to trade, and it's a hard thing to predict.
So, sorry, just to go back to the US elections and how that'll affect the dollar and the broader markets. Does the Biden-Harris administration have a preferred strategy for the USD? And what do you think will happen if they get in?
I think the Treasury has I think from 98 or 95, it was firm and strong dollar. I don't think, other than that, they have a different strategy. I don't think it's really their job to have one. Obviously, the monetary policy is down to the Fed. But the kind of the questions I would be asking, Alison, is what would happen to the dollar if Kamala came in? What would happen to the dollar if Trump came in? That is one question. For me, you really have to base it on the blue sweep or the red sweep. Anything other than that is not a trade for me. I don't think you'll get a move in the dollar or risk.
Interesting.
So there's that. So obviously, as I said, if you've got a red sweep with Donald Trump, it's like a 2016 playbook, potentially. Tariffs will probably be looking at 60% on Chinese imports, are much bigger. That would cause a trade war. So, you'd obviously get initially a dollar yen higher, Mag 7 higher, crypto higher, inflation higher, curve steepener, that kind of stuff. But how long will that last? Because if we're doing higher tariffs, so a good 20% from, say, what we were speaking about before, 40% on Chinese imports, that's going to create a trade war. So that's bad for the economy, right? So the other thing is obviously Trump will have more corporate and personal tax cuts. Great for everything inflationary, and everyone's happy. Versus higher tariffs, so less cheap Chinese imports. So that's going to hurt the corporates. So how many of those corporates are going to be choosing to go put their MAGA hats on and go America first? Well, actually, Chinese imports are quality and they're cheap. So we're not sure of that variable. Kamala's just a sort of softer version of Trump, basically, on the Chinese import tariff and the corporate and personal tax. So the outcome of that really is going to be very difficult. It's not really Kamala resist and Trump is that. It's the type of sweep, really. Is it going to be? I would not trade the blue sweep. I would definitely trade the red sweep. But that's the only trade really for me. And that's, I don't think, the key thing in something we're telling our traders, we do this thing called mapping, right? And everyone's talking about the US election. Yeah, it's going to be volatile. Save your money and don't trade it unless it's a red sweep, right? It's going to be really hard. So why not focus on the Japanese election? That is a bigger, higher probability of an outcome. And that's something we've looked at. The leadership change, we had a 5 big figure move down on a leadership change. Let's just put that into context. Do you think in your home country, if you had a leadership change, you would move 500 pips on your currency? I know it wouldn't happen in the UK.
No. Japan is definitely.
Right?
Yeah.
But it did in Japan. And that comes from Abenomics. It comes from the government's involvement in monetary policy, which is, central banks are independent, but not in Japan. They are officially, but Abenomics kind of changed those rules, right? So that's the key thing. So we're really setting up our clients to trade the Japanese election, getting that done.
Stay away from the United States.
Well, let's see if you do well out of that, and you may not need to trade the US election. That's the thing.
I just wanted to pick your brains on something before we let you go, Patrick. Is we wanted to talk a little bit about cryptocurrency as an asset class. Since about this time last year, we've had the SEC approve these ETFs. We've had the Bitcoin halving event, but it's been kind of stuck. Bitcoin itself's been stuck in a range. You still get the true believers, who are, sure that Bitcoin's going to take off and, it's going to, be saying 30 times its price, in the next 5 years. I've always been a skeptic, and I just wanted to see what your views are on crypto as a tradable asset, and B, as a game changer in the financial world. And also, for a lot of, there's this big thing in the UK with these cryptocurrency ATMs, there's a lot of big money behind this trying to make cryptocurrency as easily available as cash for retail consumers. Do you see it? How do you view it? I guess it's 2 questions here. How do you view it as a tradable asset? And B, do you think it really is going to have the impact that a lot of people are hoping it will?
So let's just unpack this. I think any new asset is great. I think it's in its early days. I did quite well pre-FTX. But like with anything, it attracts certain types of traders, right? So here's the thing, right? Crypto is not the second coming, right? So what you have to do is just run your risk profile on it. And I did that before I dipped my toe in, and I did quite well, right? But that was pre-FTX.
Okay.
Now, crypto is just an asset. It's just another currency to me. It's like any asset. You should treat it with the same respect. Now, the problem with crypto is it doesn't get that. Now, I have this thing called the gold effect. Now, a lot of gold traders are blinded by its brilliance, right? It's got an emotional appeal to it. People like to store gold in their houses, right? It's very much, you're going to buy it for long-term wealth. It doesn't pay a divvy, all this stuff, right? So crypto still has a large amount of people that are believers, right? And off-gridders and conspiracy theorists and anti-government types, right? Factor that into your risk profile. Don't be a believer. It's just an asset, right? So don't be fooled by all this stuff. But what that does is it creates, and it's thin, it does create extended moves. So just do your proper due diligence before you get involved. I would say some of the macro correlations are getting a bit more mature for to see crypto. It could be some say it's a digital gold, some say it's a hedge against inflation, some say it's a pure spec risk on move. Some, fleeting, these correlations work, then they don't. And then all of a sudden, a whale would come in, do some business, and everything gets wiped out. Is it exciting? Yes, of course it is. It absolutely explosive. But just be careful. So that's the spec side. With regards to ATMs, I think it's great. I mean, look, as a blockchain, this whole idea, I think it's really still in its infancy. But at the end of the day, it's hard to leverage. You can't really leverage off it. Will it replace fiat? Never. That's my view. Governments will, if it starts to get big, governments will get involved. They will want to tax it. The anonymous side has a dark side with criminals. So there's always that. But am I glad it's around? Of course. It's exciting, but please don't put your house on it. And don't put your house on it when you know nothing about it. It's really dangerous. So there's a guy I know who's his name's Chris Mills, right? He used to trade the Bank of England, and he's gone to crypto. He's a great guy. Check him out, right? If you need to know any more about it, look me up, connect with me on LinkedIn, and I'll send you his name. There's another guy who's an old client, ex-Goldman's guy, Sach Baru. He's now working out of Hong Kong. He's gone to the liquidity side in crypto. Really solid guy. These are the guys you really need to be asking questions. Not the guys on YouTube with white teeth and blonde hair who look beautiful and are sat on a Ferrari, like with on, you know what I mean? Not in jets, right? They kind of hide for half an hour. Yeah. So this is just, do your due diligence. It's just another asset. That's my view.
So on that note, are there any final thoughts or advice for new traders looking to navigate the markets?
Yeah, set up a call with me, and I'll show you what we do. How about that? I'll leave my details. A link to booking my calendar. Book me in. It's the best way to do it. Link with me on LinkedIn. I'm blogging about markets every day, so feel free to get in touch. Ask me anything you want, and I'll leave all my details with a link to my calendar with you guys. So please do reach out and say hello. I'm very accessible. Because I came from, nothing, and, I did pretty well. So yeah, don't worry about, there's this experienced trader or whatever. Don't worry about that. Just get in touch.
That's fantastic. And where else? Are you just on LinkedIn, or are you on any other social media where people can get in touch with you?
No, just you get me on LinkedIn. That's the main one. Yeah.
We'll put that in the show notes below the episode, so anybody who's interested can get in touch with Patrick. Well, thank you so much, Patrick.
Thank you. Thanks a lot.
Yeah, it's been really, really amazing. Interesting hearing your story and just your insights on the markets. I think our viewers and listeners will gain a lot from this episode. So thanks again, Patrick. We really appreciate it.
It's a real pleasure. I thoroughly enjoyed it. And thanks again, guys. I really appreciate it.
Fantastic. Take care then. Bye-bye.
Cheers.